All right, I think we are live. Good morning, everybody. Can you guys hear me okay? Very good. Thank you for the audio and visual test. I appreciate it as always. Let's see here. We are... There you go. Yeah, I think everything should be good audio-wise for today. Okay, what I'd like to do today is I want to spend a few minutes kind of going through, because we get a lot of questions on the index, and I think people need to understand where the lack of performance on the S&P comes from, because it's really, I think a lot of you know, we've been talking about this and preaching this for multiple quarters, probably 2 years at this point, maybe more. But I still think a lot of people don't understand yet where the issues are. So let me just walk you guys through what's really going on. So this is just really, really important to understand. So here is the S&P 500, and as you know or may know, it's essentially done really absolutely nothing since about second half of October of last year. So that's kind of since this year, right? So basically since last October, the S&P's done nothing. And we try to explain this to people, but I want to try it once again today, because for some reason it doesn't seem to resonate with as many people as we would hope it would. And so I'd like to try it once again here this morning in maybe some different terms. So the S&P is essentially divided up into 11 different sectors. In fact, these lines you're looking at here are these different sectors. And each sector has a different weight in the S&P. The largest one, of course, being technology. And so I'm just gonna show you a chart here in a second. I'm trying to bring it over here so you can see it. Where is it? Here. Okay. So this actually comes from our presentation for HeatSeeker, but I think you guys will see here what. I just unsplit this. Here we go. Okay, so this here is the breakdown of the sectors of the S&P 500. So each one has a different weighting. Now, the index, and this is not just a problem, I think this is going to be a problem for multiple years, which is why I think so many people are not going to make money and ultimately lose money over the next few years, because everyone's benchmarked to the S&P. Mathematically, it is essentially impossible for the S&P 500 to go much higher without technology leading, or at least participating equal to many of the other sectors. It hasn't been the case, because these sectors are so big. So this year, I'm going to switch on over to the performance chart. So this year, you can see that the XLE, or the tech sector, is up 26% on the year, right? Yet the index, as I just mentioned, has gone sideways, right? How is that possible? It's only possible if you have some sectors that are so large that are not participating, that it mathematically, you guys have heard me talk about this now for, again, like 2 years. I said that mathematically it's not possible for the S&P to go higher, certainly not meaningfully higher, unless technology leads. And it probably has to actually lead, not just pace with the other sectors. And that's a relative question as well. But anyway, so this is just something if you guys have questions on this, this would be a great time to ask this. And because within the market, again, we have great performance. Materials are still up almost 15%, industrials are up 13%. It's just that tech is down 4.5%, and financials are down 6.5%. And you see financials are 14.5% of the index, and tech is, if you fairly add it up, closer to between 40 and 50%. So unless these two sectors really lead, the index just cannot go higher. That's why we have this stagnation. So I just want to quickly check, does this make sense to everybody, or are there still questions on this? Because it's just critical for everyone to understand. What it's also doing is dampening volatility. So even though the VIX has been rallying a bit, it's dampening volatility because people aren't so scared because the index isn't moving, right? And people who look at the index constellation know that as long as there are some sectors pulling up the S&P, even if tech is down, they're not going to panic too much and bid volatility up too high, right? So give me a quick yes if this is making sense to you guys. It's critically important to understand. The other thing I want to show you a couple other things. There are things happening underneath the surface in global markets too. So just like the S&P has energy stocks doing well, there are parts of the market around the world. For example, the KOSPI index. If you don't know what that is, you can Google it. But it's down, or it was down 12% today, right? And it was down 7%, so that's 20% in 2 days. The KOSPI index has a similar problem, an even more extreme problem than the S&P 500. It's concentrated in just a few stocks. So if you don't think the S&P can correct, now this is an even more extreme example, but this is one of the risks. It's not my base case, but it's one of the risks that I think need to be very much aware of. Okay. So the market cap concentration risk is the biggest risk in my view that we have. It's not we have high valuations. I think the S&P is still trading about 23 forward earnings, 23 times forward multiples. So it's not a cheap market, but the biggest issue is the market cap concentration, right? And then on top of that, you have private credit issues that are starting to surface, which we've talked about forever, and so on and so on. Speaking of private credit, and I mentioned this in our trade ops chat rooms yesterday. If you look at something like Blue Owl, which is at the core of a lot of this private credit stuff, I know a lot of people are holding the bag in the stock, but you'll notice that it slowly started turning its trend from bullish to neutral, and ultimately turned from neutral to bearish in May of last year. So that's like 10 months ago. And the stock is now down 44%. Yet, if you go check the headlines on financial TV, they're just now starting to talk about this, or have over the past few weeks. We've had a short signal since May of last year, right? So, these are additional issues that can kind of accelerate the problems and ultimately maybe get the index moving in one day or another. Speaking of the index, we actually have bearish momentum, but only barely so. So even in the NASDAQ 100, which is going to be opening up higher this morning here, as the futures are up another 50 basis points, or half a percentage point. There's a lot of defined buying at the low end of the range here. So on the NASDAQ 100, it's just around 600 plus or minus. There's a lot of algos defending those levels because they know if that breaks, it breaks a whole bunch of stuff, and then you can quickly go down 5, 6, 10%. So the algos are defending that with all the might, and we'll see. I don't know if it holds or not. It's not really the point, but at some point it will it will probably snap. Yeah, if you haven't given us a thumbs up like yet, please do on these videos. This week's strategy session is based on momentum, and I want to just quickly show you guys what's going on in terms of momentum, so you have a bit of an idea. But like for example, momentum is what really, if you're a trader, and most likely if you're here, you probably do trade. You know, momentum is a very, very powerful factor in the market. Momentum is an acceleration in a trend, or just an acceleration in price movement, up or down. So for example, if you look at oil, right? So we didn't get a buy signal in oil on Monday morning after the bombing over the weekend. We received our buy signal on the 9th of January. So if you like momentum, and the USO ETF, which is what this is up now about 27% since then. It was up even more intraday yesterday. So momentum, most people who look at momentum basically get to it too late to these signals, and they chase, and that's why they end up losing money. But momentum has to be caught early, and it has to be done in a process where we reach a free profit target as quickly as possible. So this is our strategy session this week. We're going to talk about how to capture momentum moves. And we're actually doing it today at 11 o'clock Eastern. So that's 8 a.m. Pacific. I would encourage you guys to join us and learn more about momentum there. So if you haven't put it on your calendar yet, we would love to have you there. Also, I want to point out one stock that's extremely overbought, and that's Keysight Technologies. On our scans, this is using our Vertical X Pro Extreme Overbought, Extreme Oversold ratings. The ticker symbol is KEYS, S as in Sam, and that stock is currently very overbought. You can see when it got oversold in April of last year, it then rallied 148%, and you can see past signals, right, when it got overbought in December of 23, then dropped from 150 down to 120. So we're once again at a level where the stock is very, very stretched in the short term, meaning from a few days to a few weeks of time frame. So that's what we are seeing on that one. And again, if you want to learn more about momentum, we look forward to seeing you guys in the strategy session this week. Again, it's taking place today at 11 o'clock Eastern and 8 a.m. Pacific time. Other than that, you know, there's plenty of opportunity, but we do need to see a movement on the index front at some point. Clearly, we're not there yet, but that can happen pretty quickly. So, you know, it's one of those things. It's a bit dangerous to fall asleep at the wheel. Right now, it always is, but certainly now, because we're at a pretty critical juncture. And so I think we're going to see momentum moves pick up pretty quickly, but we need to be on top of it. So we'll see you guys over in Trade Ops and also in the 11 o'clock session today on how to trade momentum. The key, by the way, to momentum, and I'll teach you this at 11 or 8 a.m. Pacific, is it really has to do with having we call it a free profit target. All right, so when you get a buy signal, we have these little green dots that show up on the chart. It gives us an opportunity to close half the position, because without a free profit target, trading in general is difficult, particularly momentum trading. So we'll talk about that at 11 o'clock Eastern. So we'll see you guys there. Thanks for joining, and we'll see you back here tomorrow morning on Thursday for Take Your Thursdays. Take care.